It's time for under 30. We're looking at SentinelOne, cybersecurity software stock. Jenny, a name making a nice move here today. And there you go, underperformer, I would say ish over the last few years. Maybe not this year, but big pop here today.
Big pop here today, but the path to profitability still remains. I mean, they did give some guidance, but I think that is still sort of front of mind for so many investors. So here to tell us now more on their most recent quarterly update, I'd like to welcome in George Tsilis, senior markets correspondent for the network. So George, walk us through this nice move higher today. Now it's up over 60% this year.
Yeah, I mean, this is an interesting one. I mean, we talked about some of the major players in the cybersecurity space all year, which have, as an industry group, actually performed quite well, because you have to think about cybersecurity as an enterprise sort of mission critical spending. In other words, enterprises aren't going to cut back. In fact, they're going to increase spending. Now, SentinelOne is a cybersecurity that's a protocol-based provider. They actually have strategic partnerships with some major players like Amazon Web Services and Microsoft. It's a relatively new company from a publicly traded standpoint. It IPO'd back in June of 2021. It actually moved quite a bit to the upside going back to November of 21. It was trading around $78, so that suggested at that time that this is a company that was growing, but not growing at a reasonable price. But if you actually look at this report, I think it's actually quite interesting because considering the earnings that the company published, they lost 3 cents a share. The expectations were 8 cents of a loss. Now, if you compare that to last year, I mean, they lost 13 cents for the same quarter last year. So the losses are improving. And as you get into those low single digit dollar and cent ranges, in other words, pennies, that gives you an idea the company is getting closer and closer towards adjusted break even. And I think that's important here. If you look at the sales, they also reported an increase of 42%, 164 million, higher year over year. The other thing is their number of customers is over 11,000 now, and they also denoted that their revenue retention rate is over 115%, and that's important as well because that gives you an idea that not only are the number of customers growing, they're actually getting more dollars spent on existing customer base, and that really speaks to improving profitability profile. In other words, getting closer towards consistent profitability. And just looking at the trajectory of earnings in the last 4 quarters versus the forward 4 quarters, this company is getting close. And I think this is important because if you just consider the price action in the stock, looking, let's say, on a 2-year weekly chart, you'll notice, coincidentally, that it's been trading in a range for the last 4 quarters. The high end of that range prior to the breakout today was $22, and the low end was $13. Now, a lot of times stocks will trade in a range, and it gives you an idea that the market is trying to digest the expectations for growth in earnings and sales. Now it's breaking above that range, and some of the analysts are now constructive on this name because it has more profitability, more visibility in its profits on a forward basis.
George, it's one of these names that went public at kind of an inopportune time in hindsight, going public in June of 21. Initial public offering price was 35, and so while there was a ton of excitement around it initially, trading as high as 78.53 back towards the end of 2021, it really has been quite underwater for much of the last year and a half from that initial public offering price. There's still quite a bit of institutional investors in this name. How do you balance those two things with so many investors underwater from the beginning, but still kind of a lot of, I guess, big time kind of long-term positioners involved?
Well, I mean, all this is good points to bring up, Alex. That's why I also talk about the price action because, look, obviously, when it IPO'd, the market overpriced it from a valuation standpoint, and now it's taken 2 years to find some basing, and that's important because we've talked about a lot of these post-IPO 2021 companies. A lot of them are going to go bankrupt, and they're in terminal declines. This is obviously in a catastrophic decline, going from $78 to $13 this year. But again, you have to consider the growth story behind SentinelOne and its AI applied protocols from an end-to-end security system or cybersecurity system. So growth in sales is over 40%, and you're getting closer to break even. And one would say that's important because if you use a rule of 40, this is just sort of a general rule of thumb. when it comes down to application software companies, if your sales growth and your EBITDA growth is greater than 40% combined, that typically is a buy point from an institutional standpoint. I think this is why if you look at some of the analysts like UBS, I believe, has a $29 target on this name.
Yeah, I think a really good point, George. We will leave it there. Really great breakdown on SentinelOne with a nice move to the upside today.